I just invested over $136,000 in 10 AI penny stocks. My challenge to you, invest $1,000 in each, and at least one of them will 10x your money or more. We can't yet know the effect of AI on the economy, though estimates are as high as $15.7 trillion globally through increased productivity and consumer demand. That is nearly a 15% boost to the US economy alone, with services sector just starting to see that software transformation in the way we live. The problem is, with artificial intelligence still in its infancy, with so many companies developing software that could change our lives, we can't possibly know who wins this race. But find that one or two stocks that end up dominating AI, and it may be all you need. For example, who would have thought that online bookseller Amazon in 2001 would go on to dominate e-commerce? Shares fell to a split-adjusted 35 cents each in October of that year at a market cap of just $3.6 billion as the market wrote it off as a failed dot-com darling. But had you invested $1,000 in that one stock at that time, you'd now have over $500,000. So I researched for my top 10 AI penny stocks, the best small companies competing in that theme with not just 10x potential, but the upside to 30 and 40 times your investment. I'll highlight each, how much I invested, and the strategy that we're using to put all this together. First up, I've highlighted $400 million BigBear.ai holdings, ticker BBAI, in the past, and the stock recently jumped 31% on its earnings, so clearly they're doing something right. Big Bear is in one of my favorite themes within AI, helping companies make sense of that overload in data. They help companies organize and visualize their raw data to turn it into those actionable insights. This is key and really the first step in AI, just managing all that data collected and then being able to make sense of it. That's helped Big Bear grow its customer base and a $206 million backlog for revenue. It's also produced some major wins recently, including exclusivity with L3Harris and a $32 million award across 3 contracts with the U.S. Army, a relationship that has grown 235% in the last 3 years. Now, expectations for growth have come down to just 10% this year and 14% next, and the company is still operating at a loss, but at just 2.3 times price to this year's revenue, it's definitely one you want on your watch list. I'll share analyst targets for each of these stocks, but as very small companies, many are only thinly covered at best. We see only 2 analysts with price targets on BBAI, but that could be an advantage for investors, meaning these are largely undiscovered stocks. That could mean more potential upside, but you're going to need to do more analysis as well to find what the market isn't watching. Still, we do see a strong vote of confidence here from the analysts, with a price targets of $3 per share, or nearly double where the stock is at now. This is one of my smaller positions at just over 600 shares and $1,000 invested, but as a penny stock, lots of potential here. INOD, ticker INOD, is one that we haven't covered here on the channel, but saw its shares double on its first quarter earnings earlier this year. The company is a picks and shovels penny stock in the generative AI theme with data solutions that feed into those AI models. From data duration, transformation, and consulting, the company enables generative AI to work for its customers. Revenue is expected up 59% this year and 29% next to $177 million, and unlike a lot of these penny stocks, INOD is already generating positive earnings. What's surprising is that even after that big move this year, it's not expensive at just 5.6 times its full year expected revenue. This is another stock not heavily covered, with only 2 analysts here, but with one forecasting 56% upside, and the other with a target of $38 per share. Still though, I want to do more research here before I go further into this one, keeping it at a $1,000 investment for now, and adding more regularly. I invested in each of these AI penny stocks on this list, but if you want to see all the stocks I'm buying, you can now by joining me on the Blossom Social Investing app. The app was created by investors for investors, and I just started using it last year and love the app for getting ideas and sharing my portfolio. Now, this isn't just another social app though. You can connect your brokerage accounts or just input your stocks to track all your stocks in one place. You'll also be able to join more than 150,000 investors in the social feed to see what everyone else is talking about. I've shared my portfolio on the app and it's totally free to download, so look for your special invite link in the description below. AIPath, ticker PATH, is another AI stock I've been buying for a while in its robotics theme. Now, that's not the physical robots you might think about, but robotic processes through its software applications. This kind of business automation is going to be key for a lot of companies, and UiPath is a leader in that machine learning and applications making it possible. Management is estimating market growth to $30 billion over the next few years, which would be 15% annualized growth and Even a fraction of that would mean decades of higher sales from the company's $810 million booked over the last year. These larger companies are always heavily covered by analysts because the banks want the company's investment banking business, so they send their analysts to get to know management and talk up their IV. We have 19 analysts covering the stock here with a low target of $12, which is slightly lower than the current price, though the average target above $15 is still 20% return. And the company is the largest on our list at $7.2 billion, making it a small cap stock rather than a true penny stock, which I'm going to explain next. It is one of my largest holdings though at $51,000 and already up 7% on a stock that has a lot further to grow. That $7.2 billion UiPath brings up a point here that about half of the stocks on this list aren't technically penny stocks, but maybe not for the reason you think. I always get lots of comments in penny stock videos like, how can I be recommending a $19 share stock like INOD as a penny stock? Understand though, stock prices really have nothing to do with this. That's because when we talk about penny stocks, we're talking about those small, startup-like companies with the potential to dominate their market. When I say small, we're usually talking about companies under $1 billion market cap, small enough to see those 10 and even 100 times returns as they become those mega cap companies. That is why $19 per share INOD is a penny stock at a total company value of just $551 million. But I'm also including some stocks with market caps over $1 billion, like UiPath, because even at $7 billion, the company still has enormous growth potential ahead of it. NVIDIA is a $3.1 trillion company, 432 times the size of UiPath. And while I'm not saying that ticker PATH will ever be as big as NVIDIA, it is still a strong growth stock. All you out there in the nation know I come from that venture capital world where investing in startups is the name of the game, and it's a perfect analogy for how you should be thinking about investing in the future of artificial intelligence. Because there is so much uncertainty around which companies will dominate their niche in AI, but also so much potential. Just like in venture cap, you're likely going to see some spectacular failures, along with some amazing returns. This research I've shared before from Marquette on returns for angel and venture capital investors shows it all. It is very likely that many of the AI darlings in the market today aren't going to capture their market. Someone else will develop that killer app, and some stocks will plunge like the 50+% of venture investments that produce less than 1x return. But that is okay. That's the name of the game because your money is coming from the 1 or the 2 stocks out of 10 that become the next Amazon, the stocks that generate 20, 30 or more times your investment. That's how your overall portfolio produces this 27% annualized return, a 10x return over 10 years. But for all this to happen, you have to think like a venture capital investor. You have to be ready to give these stocks the time to prove that potential. As a venture cap analyst, and now as an investor in several startups myself, I know it's going to be 3 to 5 years and maybe even as long as 7 years before I see any exit in these investments. That's the kind of patience that you need in AI stocks right now. If you've been following the channel, by now you're probably tired of hearing me talk about SoundHound AI, ticker SOUN. SoundHound at $1.8 billion market cap is my largest AI holding and a leader in conversational AI to businesses that can be used to build AI assistants in more than 25 languages. Of course, the market for AI assistants could be ginormous, even larger than the $160 billion enterprise market SoundHound estimates. The company got a vote of confidence in February when it was reported that NVIDIA had invested $3.7 million into SoundHound and was providing hardware to the company. The shares popped another 50% on a single day in July when it was reported the company's voice assistant would be used in Alfa Romeo and Citroën vehicles across Europe. SoundHound is the clear leader in what could be one of the biggest areas of AI, those voice assistants, and it's showing that through the kind of growth we want to see in a penny stock. Expectations are for 80% revenue growth this year and next to $152 million. We only see 5 analysts covering the stock so far, but with unanimous consensus to a higher price, with even the low target of $6 a share at 20% return from here, and an average target that would be 45% higher. SoundHound is my largest AI position, with $65,000 here in my main account, though I have covered the position with selling some call options to reduce my short-term risk. I've also got 4,000 shares, or about another $20,000 investment that are uncovered in 2 retirement accounts. I've held CareCloud Inc., ticker CCLD, longer than most of these, and frankly, it's been the most disappointing so far. CareCloud is a new entrant in healthcare information technology with a full suite of cloud-based solutions, including records, practice management, patient experience, and monitoring, as well as its ability to design customized solutions for its providers. The healthcare information technology space is expected to grow at a 13% annualized pace through 2030, according to Datum Insights, and CareCloud has booked 34% annual revenue growth since 2017. Even better, the company has grown its recurring revenue 4-fold last year to $8 million. That That is repeatable revenue, all while cutting its customer acquisitions costs in half. I am down 17% on my position of 800 shares of CareCloud, but remember, we're talking about this long-term holding strategy, giving these stocks the time to prove which will dominate AI. The potential for growth is there in healthcare services, and applying AI could alleviate some of the biggest staffing and cost problems in the industry. Both analysts covering CareCloud have a $5 target on the shares and 81% upside from here, and with that long-term potential much higher. Guardforce AI, ticker GFAI, is the smallest company on the list at just $15 million, and I generally don't cover stocks this small. A lot of times these smallest of the small are just so thinly traded and with little public information that the risk here is just not worth the potential. There are no analysts covering the stock, so the research is going to be all on investors. Guardforce provides cash management and security solutions for companies, mostly in Southeast Asia, but also expanding to Western clients like FedEx and Starbucks. The company is trying to integrate its AI into its advertising and IoT solutions for its customers in retail, but growth is still unproven here. I'd consider this more of a seed stage investment, not necessarily pre-revenue, but very risky, so I'm holding at a $1,000 investment on further research and growth. We've still got 4 of my favorite AI penny stocks to watch, including one about to revolutionize healthcare, but first, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. We've covered $2.2 billion Recursion Pharmaceuticals, ticker RXRX, recently for its groundbreaking approach to drug discovery. Big pharma companies like Merck and Eli Lilly are facing a patent cliff, amounting to nearly $200 billion in lost revenues, while also pulling back on the research they spend to find new drugs. Recursion, though, could revolutionize drug discovery through its language model orchestrated workflow engine, or LOW, performing complex drug discovery tasks using a natural language interface. It's doing this by running experiments through a purpose-built AI models on massive datasets, enabling it to screen and find the compounds that won't work, basically to fail faster, so it spends less time and money developing the drugs that won't work. So through the use of AI, Recursion could dramatically lower costs for drug development, and an advantage that would be worth tens of billions of dollars to big pharma companies. The company has 6 programs in pipeline trials for 7 indications, 4 of which are in phase 2 and expecting results within the next 2 quarters. NVIDIA recently invested in the company with a $50 million equity investment and is providing priority access to its hardware and resources. Recursion also has partnerships with major healthcare companies like Bayer and Genentech for research, driving $58 million in sales this year. 6 analysts have targets from $8 a share to as high as $16, which would double the current stock price. And that longer-term upside, if Recursion can lower these drug discovery costs, is huge. It is a smaller holding for me at 130 shares, but one I will likely add to as the company makes progress in its process. My vote for weirdest name is $2.4 billion Sprinklr, ticker CXM, an enterprise cloud software company offering a customer experience management platform. The company's AI studio is gaining momentum, racking up the data points to learn and become an industry leader for its customers. Growth isn't what you'd expect from a stock in this theme, at just 6% revenue growth expected this year and next, but this one is also net income positive already, as well as cash flow positive, which takes a lot of the risk out compared to others on this list. I was surprised to see 14 analysts covering a relatively small company here. With the average target of almost $12 a share, that's a 28% upside. This is an interesting one for that longer-term growth. Here I've also got a smaller position at just 115 shares, but could add more if that growth starts to accelerate. Duos Technologies Group, ticker DUOT, is another very small company at just $18 million market cap, and extremely thinly traded under 40,000 shares a day. Now, that does mean the bid and ask spread could be large, so it might be harder or more expensive to enter or exit a position. Understand this has to be a long-term investment if you're going to make it. The company operates a railcar inspection portal with AI capabilities to inspect trains in motion, generating high-resolution images in real time to prevent derailments. Duos has used the model across more than 40 use cases, claiming a 95% reliability rate, and to have already prevented derailments. This stock could get a bump from the Railway Safety Act passed last year and hopes to expand that inspection technology across other transportation verticals in trucking and airline. This is another very thinly covered stock with only 2 analysts, but both with targets more than double the current stock price. I've got 385 shares for just under $1,000 invested in the stock, and will add more if it can expand use of its model to other transportation cases. I've invested over $12,000 in this next stock, but I'm not the only one buying these AI penny stocks. I dug into SEC reports and discovered NVIDIA, the king of artificial intelligence, is actually buying shares in 5 companies. Whether to get a piece of the profits or as a takeover move, NVIDIA knows AI and knows these companies will be big, so Make sure you catch this video next and put these stocks on your radar. C3.ai, ticker AI, hasn't really benefited from the boom in AI stocks over the last year, but valuation is very good here, and all it takes is one good earnings report to take this one higher. The company continues to add to its AI applications and platform and bring on more enterprise clients, growing out of its cash flow problems. As we've seen in the last 2 quarters, that's driven strong results and surprised the shorts to a higher stock price. The company is heavily followed with 11 analysts, but a wide spread in targets from $23 a share to as high as $40 each. This one is one of my largest losses so far, down 22% on 500 shares. But with 20% revenue growth expected this year and next, it could soon turn that around. Join me on the Blossom Investing app with the invite link in the description below and join over 150,000 investors. Or click on the video to the right to see the 5 AI stocks NVIDIA is buying right now. NVIDIA knows AI and it knows these companies have something special, so buy them fast. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.